Gold, yields, and risk assets, the Fed just lit the fuse. 1. What Powell's hint really means. When Powell says the Fed's balance sheet runoff, QT may soon end, it means the Fed could stop shrinking its $7+ trillion balance sheet, i.e., stop letting bonds mature without reinvesting the proceeds. That's effectively a shift from liquidity drain, liquidity support. So, we're not talking about cutting rates yet, but this alone would already be easing financial conditions. 2. Impact on bond yields. Short-term yields, 2Y, may stabilize or fall slightly since the market sees this as the first softening move toward easing. Long-term yields, 10Y, 30Y, likely to decline more. Investors anticipate more liquidity and potential rate cuts ahead. This steepens the yield curve, a classic pre-rebound signal in risk assets. Takeaway, yields likely drift lower as the market prices in more dovish liquidity conditions. 3. Inflation outlook. Ending QT adds liquidity to the system and not immediately inflationary, but it slows down disinflation. If growth rebounds or oil stays high, inflation could stay sticky above 2%, delaying deeper rate cuts. However, markets will interpret this as the Fed prioritizing stability over inflation risks. Takeaway, mildly inflationary in the medium term, but bullish for risk assets. 4. Gold, big winner here, lower yields plus softer dollar plus more liquidity. Perfect setup for gold upside. Historically, every time QT paused or reversed, 2019, 2020, 2023 liquidity injections, gold surged within weeks. If real yields drop, expect another leg up toward $4,200, $4,500. Takeaway, gold bullish, liquidity plus lower real yields, rocket fuel. 5. Asset prices, stocks, crypto, real estate. Equities should rally as liquidity returns, tech and growth stocks outperform. Crypto reacts fastest to liquidity shifts. Expect Bitcoin and Ethereum strength. Real estate, yields dropping supports valuations again, especially REITs. Takeaway, broader risk on move with high beta assets leading. Summary table indicator, likely direction comment yields, 10Y. Down liquidity support, easing bias, inflation, slight uptick, sticky prices from liquidity, gold, up lower real yields, weaker USD stocks, crypto up risk on sentiment returns, dollar, DXY, down easing expectations weigh on USD, my view. This could mark the transition from restrictive neutral policy. Expect a soft pivot within 1 to 2 FOMC meetings. And if data weakens rate cuts by early 2026, liquidity always leads, and right now the Fed's hint suggests liquidity is about to turn. To follow my genuine social media channels, visit underthegreat.com.